today I want to talk about another short hedge fund that's currently down over 54% so far this year and will likely collapse over the coming weeks, and how the rest of these short sellers are actually in even bigger trouble. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, Just Dario tweeted about the first hedge fund body that's just beginning to surface. It says here, Andurand's main hedge fund slumps 54% this year as of December 8th. And Alessio Urban added saying when he goes under, oil will rip, because Andurand's hedge fund is shorting oil and likely shorting many other stocks, indexes and indices too. So far down over 54% is pretty massive, but when you add to that possible investor withdrawals on top, I don't imagine Andurand will be lasting much longer. And when he bites the dust, that's just another hedge fund for biotech moose to add to his wall of mooses or meese. As of course, for every single hedge fund that collapses, that's just one hedge fund closer to the squeeze and one hedge fund closer to the big guys like Citadel collapsing too. Especially if there's other hedge funds also shorting oil. As soon as Andurand goes under, these hedge funds are likely going to bite the dust too. As I said, actually many of these short sellers are in even greater trouble after this screenshot from bar chart. You can see Tesla is just currently breaking out of that downtrend, which it's tested 4 times over the last couple of months. So far today we're seeing even more continuation over that downtrend for Tesla. And remember just how many of those hedge funds are shorting Tesla, hoping for it to fail. I believe Tesla still is actually the most heavily shorted company in the entire market in terms of dollar value. Yes, of course, many of you may say AMC, but remember AMC only has a market cap of $1.3 billion. Even if there's 10 times the float out there in terms of synthetics, that's only $10 to $20 billion in shorting pressure. Whereas I believe I'm right in saying that Tesla actually has hundreds of billions of dollars betting against it at any one moment. Even though AMC is most likely or most definitely the heaviest shorted stock in terms of synthetic shares, it's not necessarily the heaviest shorted stock in terms of dollar value right now. So actually by Tesla continuing to rocket, that will do even more damage to these short sellers in terms of total dollar losses. And of course, just to slip this one in there, we've actually been playing call options on this Tesla breakout over the last couple of days, where Kevin has already locked in over $738 in just 2 days from the Millionaire Mindset Trading Group. But as I said, as these hedge funds take on heavier and heavier losses, whether it's Andurand shorting oil or hedge funds out there shorting Tesla, every dollar loss is a dollar closer to the squeeze. If these hedge funds so far this year have lost over $100 billion, I could only imagine how much they'll be down if Tesla continues ripping back to 300 or 350 over the next few weeks and the next few months. And that's why Just Dario has also tweeted saying we might be about to discover who Archegos 2.0 actually is. And he said when Archegos was about to blow up in 2021, something happened that day that immediately preceded the event. But he said, what was that something? He said the large cap companies that Bill Hwang was busy squeezing to the stratosphere was hit by a heavy selling out of the blue. And this is what's actually been happening over the last couple of days in some of the big name stocks like Apple, Microsoft, Google, Nvidia, Amazon, Meta, and Tesla. While many stocks like Coinbase, Carvana, Upstart and Affirm have been squeezing, many of these big blue chip stocks are down a few percent from their highs already. Especially as over the last few days we've also seen the S&P 500 fully green, but we've seen some of those Magnificent 7 stocks down a few percent. So maybe we're about to have another hedge fund that exposes themselves as Archegos 2.0. I also wanted to go through yesterday's brilliant trade from the Millionaire Mindset Trading Group on FRGT, which locked in well over 45%. You can see here in the pre-market, FRGT ran up to 96 cents per share. We then entered on the break of that 96 cent level and rode it up for an extra 45%. But one of the brilliant things about the Millionaire Mindset Trading Group is that I don't just give alerts, I also teach you how to take these trades as well. And many in the group actually got in before that 96 level, at this breakout at 75 cents, this breakout back here at 69 cents, and this breakout down here at 56 cents. As you can see here, Tower King bought at 72 cents, 88 cents and 92 cents, selling for not just a 45% gain, but selling for a 55% gain. So if you want to follow the millionaire mindset trading alerts, or even learn how to make those kind of trades yourself, where you can make $2,800 in a single day like S to the P did, be sure to join the group linked in the description below. Now, with these shorts in so much trouble all over the market, shorting oil, shorting stocks like Tesla, shorting heavily shorted stocks like Coinbase, Carvana, Upstart, Affirm and many others, it seems InvestorPlace is up to their usual no good. InvestorPlace is still begging you to sell AMC with their latest article, AMC stock. This dog with fleas just won't die. Should you buy it? No. Again, AMC is now performing this turnaround from struggling company during the pandemic to a widely successful company generating increased revenues, generating profits and generating positive cash flows. While AMC continues this upward trajectory, increasing their profits, increasing cash flows, paying down debt and everything else, AMC continues to become an even more successful company. AMC as a company will not die and it will not go bankrupt. Ultimately, AMC will become the best version of itself that it's ever been. And in doing so, in generating all-time high revenues and profits, the stock price will also recover to new all-time highs. And that's why, again, still InvestorPlace is desperately trying to beg you to possibly sell some shares. Now, China is really showing us exactly how we should be dealing with these criminals. As Boss Blunts has tweeted, a Chinese former bank manager has been imprisoned for life over one of the country's biggest corruption cases, saying Zhu's two accomplices were previously sentenced to 12 and 13 years in prison. He's also been deprived of political rights for life, with all of his assets being confiscated. Other high-profile financial executives from Chinese state-owned banks have also been fined, jailed, or are currently under investigation. And he's asking if the Justice Department is paying attention, as they are really showing how we should be dealing with criminals. Now, Roger Hamilton has tweeted about the SEC actually hitting back against these hedge funds, noting GameStop. The tweet says that SEC hits back after hedge funds sued the SEC over the new short-selling rules. And Gary Gensler said, remember the events around GameStop nearly 3 years ago. He said, we have a lot of transparency on the long side, so let's add transparency to the short side that Congress is mandating. We know that Gary Gensler is likely in the back pocket of these shorts and will never directly go after and investigate these short sellers, these short hedge funds and these market makers. But I do think improved short selling transparency rules would definitely make these hedge funds and short sellers think twice before shorting more stocks. Because if they know their short position is going to be shown for all to see, many on Reddit and many other hedge funds will fight against these shorts, obviously pushing the price up. That was exactly what drew so many investors to GameStop in the first place, noting that it was shorted over 140% of the float, which caused the entire of Reddit and other hedge funds to jump aboard against these short sellers. And if more of these short positions are going to be exposed through different derivatives and disclosed for all to see, many other hedge funds and many other retail investors will be fighting back against these short sellers. But as Spence tweeted, he said it's not just about short sellers specifically. We also need market maker and broker transparency. He said selling shares that exceed the legal number of issued shares in a float is a huge problem. Shares sold long that shouldn't exist destroy the supply and demand of a stock. He said this is most likely where we get statements from guys like Ken Griffin saying that we set the price instead of a natural supply and demand market value. Supply and demand of a market is how a price for a kind of good should be set. These prices shouldn't be set and dictated by the market makers, changed at their will. Prices should be set based on sellers, based on buyers, based on supply and demand and what anyone is willing to pay for it. Not artificially suppressed and deflated and forced downwards because a market maker said so, because they don't want their unrealized profits turning into massive losses. And finally, Hang Loose has also tweeted saying the swap that was set to expire today got moved to January and is now registering as $100 quintillion. That $999 trillion swap just blew past quadrillions straight to 99 quintillion. And he said WTF is going on because that's 1,000,000 times more money than all global money in existence. You can see from this screenshot it's now been rolled to the 8th of January 2024 at 99,909,909,909,909,909.99999, aka 99.9 quintillion Canadian dollars. Whatever this swap actually is, it's clear that nobody wants to pay the swap and they just want to continue rolling it and kicking it down the road. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.